Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of eye-popping surges in Chinese equity markets. But first, in the US, the widely watched ISM survey of the services sector has delivered a spectacular result after 2 months of starkly negative readings. It is so good, at an index level of 57, which indicates a very strong economic expansion, that it is hard to believe. The rival internationally benchmarked survey records a small contraction in the same June period, which is more consistent with other economic data. Still, it is the ISM one that Wall Street watches, and that result has powered the S&P 500 up by 1.2% in afternoon trade today. In the Shanghai equities market, there was also risen strongly. It was up 2% on Thursday, another 2% on Friday, and then yesterday it rose a very sharp 5.7% on the day. Since the start of July, it is a market on a tear, up 12% in less than a week. It is the most overheated since 2014. Analysts say a key driver is that hedge funds and quant traders are now unwinding bearish short trades, no longer betting that China will stumble. And behind both Wall Street and the Shanghai rallies, there are rallies in tech stocks, ironically driven by the political need to decouple their respective economies from each other. And to extend the irony further, it is Wall Street that is responding to the Shanghai surge. And even Chinese bond yields are rising as the shift to equities sees investors switch away from fixed interest securities, even Chinese government bonds. But given the relentless rise of the coronavirus, it's not hard to think that this investor enthusiasm everywhere is quite misplaced and can only end in tears. In some overnight direct economic news, the Bank of Canada business and consumer surveys, no one thinks that the immediate future is very bright there. Indonesian consumer confidence is underwhelming. German factory orders are recovering very weakly. And later today, we'll get Japanese household spending data, which is also expected to be very weak. The US Treasury 10-year yield is up to just on 0.70%, and the Chinese government 10-year bond is up sharply, up 10 basis points to 3.03%. And the gold price is up $9 to $1,783 an ounce, and that's a new 9-year high. Oil prices have also firmed, but only marginally. They're now just over $40.50 a barrel in the US, and the international price is just on $43 a barrel. And the Kiwi dollar is firmer too, now just on 65.6 US cents. On the cross rates, we're holding at 94 Australian cents, but against the euro, we're marginally softer at 57.9 euro cents. That means our trade weight index is still just on 70.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.